Stocks are up big for the day on Friday, finishing a decent up week. And we have some interesting news on crossovers. We see 20-year bonds down for the day, 0.45%. And we see gold up big also, up 0.145%. First, let's jump into the S&P 500, then we'll get into the NASDAQ 100. But we do have, and again, I zoomed in before I drew the weekly vertical crossover going up. It did happen at the end of the day. It happened for the day, for the week, at the end of the day on Fridays when we call the weekly candle. We actually have a weekly vertical crossover. The first one we have seen, since all the way back to when the last one occurred about mid-October. So it has been a long time. That portended, of course, what's so beautiful about weekly vertical crossovers is they are almost magical. They help us jump into or out of the market in our practice trades, and they are just the best thing going when you can find them. Typically, now this marks 3 weeks of up movement, enough strength to push the derivative oscillator over to the positive and to have a weekly vertical crossover. Those occur when the price percent oscillator crosses the red signal line. Now, it's not a super strong crossover. It's a down day on Monday, a down week. It could pull it back through, but hopefully it's going to portend more and stronger up movement, which they typically do. Now, with the market, everything is not perfect. In fact, remember what our rule is. We want to look at the market around 10:30. You can look at the 30-minute chart and see how things look on Monday. If things are going up nicely, the market's not just crashing, then of course you might want to go ahead and do a practice trade. You can also wait till noon and look at that 4-hour candle. But keep an eye on things and let's just see how it's going. Hopefully, we're going to have some sustained up movement for a while. That's typically what happens with a weekly vertical crossover. Now we look at the 2-day chart. Remember, Friday ended the latest 2-day candle. Now, the thing that if you ask me to really analyze what's going on, here's what I would say as we zoom in. I have some concerns with on the S&P is we've had a sideways slide going on. Now, the market could just be digesting the prior up candle starting from the 7th, the 2-day candle ending on the 2-day candle on the 18th of January. And we saw the market digest, some things after the down moves when it started moving up, popped up for basically 4 days, and then sort of sideways for 2 days and then up since then. We could be seeing the market just sort of digesting and slowing down, getting ready to supercharge and move up further. But I am a little concerned with the sideways slide, and over 4 days it's not risen above where it primed out on the 18th, so this last Friday. So we'll just continue to watch and see what we see. Remember, this was a shortened week. Market was closed on Monday for Martin Luther King Day. Derivative oscillator is losing energy on the 2-day chart, but the price percent oscillator is heading up. Let's take a look at that 4-hour chart. It tried to cross over going up, didn't quite do it. Up movement in the morning, and then sort of same kind of movement in the afternoon. So our Heiken Ashi average pace candlesticks show us some up movement in the morning, just sort of sliding sideways and petering out in the afternoon. Not enough up movement for a vertical crossover on the 4-hour chart. So if come Monday morning, you see things crossing over nicely in around 10:30 after idiot hour, and that is the first hour the market's open, market maker has a lot of control. That is when the people who are foolish enough to buy market orders can get sold out of positions for losses they thought were gains, or bought into positions they thought would be gains that end up being losses. Read more about the kind of control the market makers have on the opening hour, and you will see that, of course, you don't ever want to place a market order. Good till canceled orders are typically better, and you can set your own price at which you will purchase. A market order lets the market maker set that, particularly in the morning. So be careful there. But what we want to do is look at things around 10:30, or just wait for that 4-hour candle to form in the morning and then potentially jump into a practice trade in the afternoon. Now, again, caveat, we are not giving trading advice. You don't pay us for that. We do this for free. We are not giving market advice. We are talking about you doing practice trades and learning, educating yourself, using what we teach and many others teach. Read all the books, practice, and when you get good and want to spend your own money, you do it on your own time with your own knowledge. We are not giving market advice. We want you to practice. Use the trade worksheet, do a practice trade, and see how good you can get and see how these weekly vertical crossovers work. That's where we are on the S&P 500. We're going now to the NASDAQ 100. This is a much better looking crossover. We've already marked it. Weekly vertical crossover on the Qs also. The NASDAQ 100 derivative oscillator gaining upward momentum, going in, finishing up the third week of decent up movement. Again, still hasn't peaked where it did in the prior week. So don't like that, but anyway, we've got a weekly vertical crossover now. We go from the weekly chart to the 2-day. What do you see there? Well, again, hasn't risen as high as it did back on the 18th after the last 4 days, but we do have a green up candle, really more of a spinning top. It's got a wick on the bottom. Let's move there we go, you can see it a little better. Got a wick on the bottom and a longer wick on top. So that's a green spinning top tending up. So derivative oscillators losing upward momentum. Price percent oscillator, however, is headed up. We look at the 4-hour chart, and of course, decent candle in the morning, decent up movement in the afternoon. Derivative oscillator hasn't yet popped over to green. Look like it's getting close again. Watch Monday morning. See what you see happening in the market. You might have a potential jumping in point on the Qs. And hopefully this weekly vertical crossover portends lots of up movement over the next several weeks. We go back to the weekly. We leave stocks, go to 20-year Treasury bonds. What do we see going on there? Still confirmed up move on the weekly chart, really sliding sideways. This week, green spinning top means, excuse me, indecision tending up. Derivative oscillator still barely headed up. I'm sorry, derivative oscillator losing upward momentum. Price percent oscillator still barely headed up. So weakening there in bonds. Don't have a trade because even though the weekly's in a confirmed up move, 2-day is in a confirmed down move since a vertical crossover back on Tuesday the 15th. We saw things go down until around the 18th, and then these last two 2-day candles are up. Not enough up movement to cross over going up, however, and so we don't have a trade. We look at a 4-hour chart. We see where things peaked back on Thursday, down in the morning and the afternoon on Friday. Derivative oscillator losing momentum. Price percent oscillator is about flat. So we're waiting to see how things shake out in bonds. Remember, typically the way the market works, bonds are a safe haven when stocks aren't doing well. When stocks are doing well, bonds typically are not where the money goes. So we'll continue to watch and perhaps expect bonds to roll over rather strongly if stocks really do take off. Lastly, we go to gold, up big for the day, 1.46%. Now, we do give you the caveat that as we look at things, well, it is nice. If we look at the wick on the latest weekly candle, even though it's got a wick on the bottom too, which again means some down forces at play, unlike the strong up candles that we saw going up with no bottom wicks all the way from the 7th of December up to the week ending the 11th of January. We do see that we did have price movement rise above where it had back on its previous high, I guess all the way back on the 4th of January. So the week ending then. So again, up week, we see the derivative oscillator losing upward momentum, as we would expect with that sideways slide. Derivative oscillator losing upward momentum. Price percent oscillators heading up. That's on the weekly chart. We go to the 2-day chart, and of course we see the sideways slide still going on after strong down movement with the crossover going down on the 18th. What is interesting is that with this latest up candle, we're getting closer potentially to a crossover going up. If that occurs, then we can have a trade in gold happening again because we'll have the 2-day perhaps moving in the same direction as the weekly. That happens over the course of this next week. Then we can start getting prepared for up movement. Right now, however, still confirmed down. Derivative oscillator gaining downward momentum, but that price percent oscillator is heading up. We look at the 4-hour chart. Big up in the morning, big up in the afternoon. And we'll just continue to see how much longer things continue to go up. Maybe we'll be set up sometime over the course of the next week or two for an uptrade in gold, yet to be seen. Folks, that's where we are as we end the day. Weekly vertical crossovers in effect for the NASDAQ 100 and the S&P 500. If you don't have our book, Charting Your Way to Wealth, you need it. We got a great chapter on our trading methods. And of course, this is one of the two. This is the weekly vertical crossover. Please, I'll go ahead and put the crossover trainings at the end of the video today. You can find those at our website, chartingwealth.com, and at our YouTube channel. Please subscribe at both. Buy our book, and also for all of our Patreon supporters, this next week, we're going to do that live broadcast. We're going to analyze the stocks you are interested in for the month. Please go ahead, Patreon supporters, and start emailing me, cw@chartingwealth.com, the stocks you would like us to analyze, and we will choose the most popular ones, and we will look them over for you and also give you some other pointers and tips. If you're not a Patreon supporter and want to get this kind of information and such, see the link in our show notes to the Patreon page. Same thing if you want to purchase the book, link in the show notes. Also, if you're going to jump into one of these practice trades next week, be sure to print out the trade worksheet. PDF is available in the show notes too. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.